Greetings, guys. Welcome to the Wealth for Real YouTube channel. I'm your host, Christopher Anastasio. It is Friday, August 18th, 2023. And I want to make this quick video, guys, about this concept of buy, borrow, die, or why rich people never have to pay taxes, pretty much, if they don't want to. And so I'm going to talk to you about that. You're actually going to see a lot of videos about buy, borrow, die on this channel over time. In just a few months that I've had the channel, I've talked about it several times. But what was at issue here that I wanted to make a video about was a YouTube short that I created a couple days ago, actually one of my better videos, over 2,000 views. Thank you so much to everybody who watched it. Thank you to everybody who commented on it. Very much appreciated. I mean that very sincerely. Even if you disagreed with me, just the engagement and the back and forth, I super appreciate it. But this video right here, rich people never have to pay taxes, I kind of address this buy, borrow, die concept, which I'm going to go into a little bit more here in a moment. But there was a comment in here, and I wanted to bring the comment up. I couldn't figure out how to do it without going through 10 more hoops. So if you go to this video, or if you watch this video, you should be able to see in the comments, there was a gentleman, forget his screen handle, who said something like, something about, rich people pay the most taxes. It's the rest of us that pay the least. This whole buy, borrow, die thing that I was talking about is a myth, and so on and so forth. And I wanted to start off by saying that the comment that he made, as far as I understand it, is accurate. The wealthiest people in the country pay the most share of taxes in terms of where the percentage of revenue comes from. There's a whole batch of people in the country, a pretty sizable percentage, who pay no tax at all. I think that's a kind of a sad commentary income-wise on our country in terms of failing those people with economic opportunity, because it means they don't make enough money to even pay taxes, right? But yes, the bulk of the tax money that's coming in is coming from the wealthiest people, or people who make very, very high wages and so forth. So I didn't necessarily disagree with the comment or the individual who made it, but I wanted to clarify what I really was getting at with the 60 seconds or less that I had in this particular video right here. So let's start at the beginning, guys. I came across buy, borrow, die courtesy of this gentleman right here, Ed McCaffrey, okay, a professor at the USC Gould School of Law. And you can see here, guys, I just did a quick little Google search. I know I'm not saying these are the best articles that you should, if you read some of these articles, you're definitely going to get educated on buy, borrow, die and Ed McCaffrey, but there's lots of them out there, and I'm not saying these are the definitive ones. This article here from Yahoo Finance had a nice little summary right here, at least an intro to what it, to where this even came from, this comment that Ed McCaffrey coined in the 1990s, explaining how people get rich and stay that way. The term resurfaced amid discussions of tax inequality and how people can reduce their tax burden. So if you click on this article, which it looks like it came out actually very recently, I'm surprised I didn't catch this one a couple weeks ago. And it basically says, theory holds that rich people aren't gaming tax system with loopholes or fraudulent practices. They're limiting through what they pay through strategic investing and planning. So the three steps: you buy appreciating assets, stocks, real estate, artwork, fine wine, other collectibles. Then you go ahead and you borrow against it. Rather than selling off investments for cash and incurring capital gains tax, you can borrow against your assets instead. Double tax benefit, you don't get hit with capital gains, and loan proceeds are not taxable income. Okay. And then you die, which is the least pleasant part, but this is where you can actually pass these assets over to the next generation with a stepped up cost basis, meaning when they get this stuff, they don't pay taxes on the difference, like what you paid and what they get it at. It just, the price basis just moves up to the present day price when they inherit it. So the process starts all over again for them. They kind of reset the table, and now they can buy, borrow, die off the assets. So this is a pretty good summary here. Actually, I'm very glad I found this. I'm going to take a closer look at it and probably post it on the Facebook page. You can also see here, back in August 2021, USC itself posted an article about buy, borrow, die gaining new life. I didn't know about this article either. But Ed McCaffrey is sort of memorialized here concept-wise. I definitely need to read this. But you can kind of see here them talking about the same concept, just slightly different approach to how they're explaining it. The reason I think this probably came out in August 2021 is because of this article, which is the kind of heart of this video I'm making for you guys. You can see this article came out in June of 2021. In fact, it was the very first article, at least as far as I know, the very first article in the ProPublica tax series, this sort of expose that they did on the wealthiest individuals in the country, how they avoid income tax, how they exploit every loophole, how they get richer and richer and richer over time. I believe this was the entree article, June 2021. So then it looks like in August 2021, USC kind of capitalized on that and sort of brought McCaffrey's phrase back to the forefront. But here's what I really wanted to show you guys in here, based on the comment I got on this video, this YouTube short, is if you scroll down here not too far, and of course I recommend you read this whole article, guys. Like if you only read one of their tax articles, this is the one to read, okay? Because it'll just blow you away on how they do this, how they pull this off, and how little tax they actually pay. And so, so here's a nice little teaser. You may be paying a higher tax rate than a billionaire. Almost certainly you're paying a higher tax rate than a billionaire. And you can see in this chart here, guys, this is what I wanted to show you. Ultra wealthy by the numbers, wealth, income, and taxes for the richest people in the country from 2014 to 2018. And let's take a look at the usual suspects, right, who always come up in these discussions. Warren Buffett, wealth grew 24 billion in that time frame, reported 125 million in income, paid 23 million in tax, or 0.1% true tax rate. Okay. In terms of taxes paid, I believe, against wealth growth. I think that's how they're calculating this. Jeff Bezos, of course, Amazon, grew by 99 billion, 973 million in taxes paid, put him at a 0.98% true tax rate. Bloomberg grew by 22.5 billion, paid 292 million in tax, 1.3% true tax rate. And I guess the biggest sucker of all four of them, Elon Musk at Tesla, 13.9 billion growth, 455 million in tax, 3.27% true tax rate. So what I was referring to in this YouTube short, guys, isn't the empirical amount of taxes paid. Obviously, these guys paid a lot of tax. Buffett, 23 million. I mean, Bezos, almost $1 billion in tax. $500 million in tax for Elon Musk. I mean, these are big tax bills that these guys paid. So to the commenter on that video, he's absolutely right. I mean, you can see the water that these guys are carrying in terms of their total tax bill, but you can also see from their true tax rate how actually little they're paying percentage-wise of the growth in their wealth in terms of their net worth, all the assets they compiled, the income, I guess, that they derive from those assets. I mean, this is really the root number that ProPublica was working off of in terms of, okay, well, these guys, grew their wealth by this amount, but they only paid this amount in tax. Therefore, they have a true tax rate of this amount. And, for anybody who's doing their taxes, that's a number you should always take a look at. I think when you do your taxes is, like, for example, if you use TurboTax, like I do, that front page that they put in there, they'll show you like, here was like your gross income, like the top line income. And here's the total tax you paid. Take that tax, divide by that top line number, and that gives you your effective tax rate. So I believe that's what they mean when they say true tax rate here. Maybe it's a slightly different parameter or definition that they're employing. But the bottom line, guys, is, I mean, these are pretty small numbers. Even the biggest of these four numbers is pretty small. I think the lowest I've ever gotten my effective tax rate is somewhere around 15%, 12 to 15%, which I felt pretty good about. And here you have Elon Musk paying $455 million in tax and paying a true tax rate of 3.27%. So again, wanted to clarify that, guys, when you watch this YouTube short, if you do watch it, thank you. That's what that exchange was about. And I think both myself and the commenter are correct in this matter. And this is really why I believe we are both correct in that matter from this ProPublica article. By the way, guys, I've published this article a couple times or posted it on the Facebook page. The last time I posted it was back in June of 2021, I guess a couple days after the article came out. You can see it right there. And I think I posted it like the absolute first day that it came out. And that's probably somewhere further down here. So anyway, appreciate you guys watching this. If anybody has any comment on this, feedback, if you've read the ProPublica stuff, dealt with this tax stuff, have any thoughts on buy, borrow, die? Is it legitimate? Is it fair game for wealthy people to be able to do that? Is that something we should change? Is that something Congress needs to find a way to close the loophole on? I know they've contemplated wealth taxes that have gone nowhere because nobody knows, at a minimum, nobody knows how to tax somebody's net worth versus their income, right? Unrealized gains. How do you tax that, right? So that's the heart of the issue on the wealth tax. You could argue there's other reasons that they don't pursue that, probably the campaign contributions that are coming from those individuals, but that's another story. But thanks for watching this video, guys. Would love to hear your feedback on Buy, Borrow, Die, ProPublica, McCaffrey, my YouTube short, etc. In the meantime, hope everybody has a great weekend, and we'll see you guys again soon. Till next time. Thanks, guys.